In roughly a year, the value of Nvidia has tripled. Will this increase continue if investors keep rewarding the enthusiasm around AI? I think it is. This AI bull market is only entering its third or fourth inning. It might not seem right, but this is just the beginning of the game. As unsettling as it may sound, this sensation may last until this bull market reaches its pinnacle, which may be referred to as a true AI bubble. People may eventually cease discussing valuations at all. The strange paradoxical truth is that if we're concerned that the situation may be ending now, it most likely isn't. You ought to start worrying when we cease worrying. We're going further into Nvidia, a titan of the IT industry, in today's video. Similar to Tesla, Nvidia has transformed its sector by keeping total control over its whole technology stack, which includes GPUs, advanced software, and firmware upgrades. Maintaining an impressive market share, Nvidia is pushing the frontiers of innovation. We'll examine how comparable strategies for maintaining backward compatibility and managing technology have propelled both Nvidia and Tesla into market leadership. We'll also compare the strategic approaches of the two businesses. We'll also analyze Nvidia's present financial situation, delving into stock valuations and the implications of these numbers for prospective investors. Keep reading as we break down these intricate subjects and give you a thorough picture of Nvidia's current position and future prospects in the risky world of tech investments. Let's explore the fascinating world of AI, Nvidia, and Tesla technology. First, though, please remember to support us by leaving a like on this video and signing up for Tesla stock news. Now let's get going. Now let's focus on Nvidia, a firm whose explosive growth has drawn interest from investors all over the world. In only a single year, its valuation has tripled. However, the issue still remains. Will Nvidia be able to sustain its rapid growth in the same way as Tesla did in the auto industry? The trajectory of Nvidia has been nothing short of extraordinary, evoking memories of Tesla's own explosive early growth. An insightful observation from Doug Clinton of Deepwater Asset Management is that, similar to the early boom in electric vehicles led by Tesla, we may still be in the early phases of an AI-driven market development. He suggests that this AI bull market might be in its third or fourth inning. Even if this stage seems hopeful, there is some unease that may last until we hit what may be called a peak AI bubble. Not just Doug feels this way about things. With a possible market valuation of $5 trillion, Linnea, the chief investment officer at Navin Associates, has made a daring prediction for Nvidia. It may overtake Microsoft. I have a question for you. If you were to sell everything and keep only one stock, which would it be? Most likely, there would be a monopoly. Nvidia is currently the greatest monopoly, NVDA. In the next years, their artificial intelligence graphics processors might be worth $300 on the stock market. To put things in perspective, Nvidia would surpass tech giants like Apple and Microsoft with such a price. This presents an interesting situation for investors, drawing comparisons to Tesla's own disruptive impact in exceeding traditional automotive businesses. The primary data center division of Nvidia has had a meteoric rise, going from $15 billion to an estimated $100 billion this year alone. This extraordinary development trajectory highlights a trend toward generative AI that is changing the computing and software ecosystem, mirroring Tesla's quick scaling in its industry. Similar to how Tesla has led the way in the electric vehicle industry, Nvidia is positioned as a leader in this technological revolution thanks to its all-encompassing market approach, which is highlighted by its scalability, cutting-edge software, and networking capabilities. But as with any fast expansion, there is much discussion over whether this rate of growth can be sustained. The rise of data center installations, now valued at over $1 trillion, shows a massive market still awaits, even though the pace may not continue to match the last 2 years permanently. As Nvidia gets closer to reaching a $5 trillion market valuation, it's important to remember that this accomplishment would not only put it economically stronger than the majority of world economies, but also that smart acquisitions could increase its influence across a range of industries, much like how Tesla expanded from making cars to becoming an energy solutions company. Nvidia is a prime example of the business's enormous development potential. Estimates for the AI market from 2023 to 2030 indicate a 37% compound annual growth rate. Similar to Tesla during its first stages, Nvidia is a clear choice for investors hoping to profit from these broad trends. However, the crucial query still stands. Is this the right moment to boost your Nvidia investment, akin to placing early investments on Tesla? It's important to take growth trajectories into account when contrasting Nvidia with tech behemoths like Apple. With all due respect to Apple, Nvidia's rapid growth is reminiscent of Tesla's ascent. Apple's revenue fell by 4% in the latest quarter, whereas Nvidia's soared by an incredible 237%. Nvidia's revenues increased by 991% in a decade, much above Apple's 56% growth. This sharp contrast highlights why, similar to Tesla's previous strategy versus established automakers, Nvidia, and not Apple, may be the more exciting growth option at the moment. Nvidia's competitive advantage goes much beyond simple financial indicators. It's easy to draw comparisons with Tesla, whose groundbreaking inventions have completely changed the transportation industry. Nvidia is leading the artificial intelligence revolution, just like Tesla has led the market with its breakthroughs in electric powertrains and battery technologies. AI technology has been the focus of Nvidia's aggressive innovation efforts, spearheaded by CEO Jensen Huang. Huang recently unveiled the newest AI chip architectures, including the Rubin and the soon-to-be-released Blackwell models. This shows how committed Nvidia is to remaining at the forefront of technology. Similar to how Tesla introduced cutting-edge, high-efficiency batteries that have revolutionized the car industry, these advances represent substantial leaps ahead in capabilities rather than just small improvements. Nvidia's ambitious and well-defined roadmap reflects a calculated strategy to take the lead in the artificial intelligence market. For instance, the Rubin architecture aims to improve the speed and efficiency of machine learning, which might hasten the development of numerous AI applications, ranging from sophisticated data analytics to driverless cars. Comparably, the Blackwell model is about to provide even more advanced characteristics, like improved neural network performance and increased energy efficiency, which are essential for scaling AI solutions in environmentally friendly ways. This proactive approach to AI chip innovation is similar to Tesla's approach in the electric vehicle market, where the company has maintained its leadership position thanks to ongoing improvements in battery life, vehicle autonomy, and energy efficiency. Similar to how Tesla spearheaded the electric vehicle revolution, Nvidia is reshaping the AI landscape, establishing new standards for the sector, and supplying the core technologies that will enable the next wave of AI applications. With high bandwidth memory and ultra-fast switching, Huang is driving a big computational shift that will, like Tesla in the automobile industry, significantly improve performance and establish Nvidia's dominance in the AI GPU market. Furthermore, Nvidia's software skills are every bit as remarkable as its hardware advancements. Just as Tesla's patented technology has established a standard for the electric vehicle market, the CUDA software platform has done the same. Like Tesla's domination in the electric vehicle market, this ecosystem strategy fortifies Nvidia's position as a leader and places major obstacles in the way of competitors. Examining Nvidia's marketing approach in more detail reveals that the business is an expert at both innovation and market adaptability. This type of comprehensive management is similar to how Tesla keeps refining its electric cars while making sure that new software upgrades work with older versions. In the quickly changing tech sector, it's a tactic that not only preserves but also increases market supremacy and consumer loyalty. Traditional criteria for stock valuation, such P/E ratios, continue to hold intrinsic significance in a market characterized by perpetual innovation and substantial R&D expenses. They offer crucial information on the financial standing and market placement of an organization. The significance of these measurements is demonstrated, for example, by Nvidia's stock, which was selling at about $150 in July 2022 before rising to over $900. An increase in stock price this magnitude encourages investors to look past the numbers. Conventional tools for valuation force us to examine more detailed factors, such Nvidia's significant dependence on a small number of important clients, which could provide dangers if these partnerships falter. Furthermore, Nvidia's market share and profitability may be impacted by additional constraints brought about by the competitive landscape, which includes industry titans like AMD and Intel.